Hi, Howard Deal here from the General Agency, and today I will be going over specific and aggregate deductibles as they pertain to level funded and self-funded plans. When writing level funded and self-funded insurance policies, sometimes the language can sound confusing, specifically the specific and aggregate deductibles. So I'm going to run over this quick video and hopefully this will explain it in layman's terms so it'll be very easy to understand. Specific and aggregate deductibles apply to level funded plans, self-funded plans, and ASO plans. Level funded plans refer to fully funding the employer aggregate deductible over the course of a year. For a more detailed explanation of this, you can visit our channel and make sure you subscribe to our channel, and we'll have more videos coming out soon. Self-funded have an aggregate deductible which is paid by the employer on an ongoing basis, and I'll put another video out on self-funding also a little on down the road. ASO stands for Administrative Services Only. Those are typically for very large groups that pay their own claims, and they just have the insurance company administer the claims activity, but all the claims are paid by the employer themselves. When a group purchases a level funded plan, self-funded plan, or an ASO plan, the employees see that they just have a typical health plan. They'll have doctor office visit copays, drug card copays, deductible coinsurance, maximum out of pockets, and they typically don't know that they're on a level funded or a self-funded plan. These self-funded and level funded plans are typically PPO plans. The aggregate deductible. So when a group writes their monthly premium check and they send it into the insurance company, it gets divided up into two pieces. It gets divided up into fixed cost and monthly aggregate. The fixed cost pays for reinsurance, administrative costs, commissions, network access fees, and more. So let's say in this example, the total monthly premium is $10,000 and $6,000 of that is the fixed cost. That money stays with the insurance company and there's no refund on that. The monthly aggregate for this particular example is $4,000. So over the course of 12 months, the total annual aggregate is $48,000 for this group. Okay, so let's take a look at a level funded or self-funded plan on a good year. In this example, let's say our employer has an annual aggregate of $48,000 and Bob has claims of $500, Jane has claims of $1,200, and Jim's claims are $5,500. So over the course of the year, the total claims paid out for this group is $7,200 for the year, which means the employer will get refunded $40,800. So this is how level funded and self-funded plans work on a good year. So let's say, for example, you had a bad year. Same thing, $48,000 aggregate. Bob's claims were $500. Jane's were $1,200, and Jim's claims were $500,000. This is a bad year. Now, this is how the reinsurance company protects the employer from the excessive claims. So the claims for this year were $501,700, and the employer refund is $0 because the reinsurance actually paid the claims that were over the $48,000. So in this scenario, this is a bad year. The employer would get back no money, but their maximum exposure would be the $48,000. So a specific deductible is for specific claims. So in layman's terms, it puts a limit on a large claim and protects the aggregate deductible from being depleted. So in this case, Jim had claims of $500,000, and there's a $10,000 specific deductible that's written into this policy. Specific deductibles protect against large claims. So Jim's claim that was $500,000 is limited to $10,000 coming out of the employer aggregate. So a policy with a specific deductible of $10,000 will protect the employer even in a bad year. So in this example, the aggregate was $48,000. Bob's claims were $500. Jane's claims were $1,200. Jim's claims were $500,000, but that specific deductible limited the claims to $10,000. So in other words, only $10,000 will come out of the employer claims fund, and the rest is going to be picked up by the reinsurance company. So the total claims for the year is $501,700, but the employer will still receive a refund in this example of $36,300 because that specific deductible has limited the large claim to $10,000. When you're buying level funded and self-funded plans, there's a couple of questions that are major that you need to ask. First is how much of my employer aggregate will be returned to me if it's unused. Some insurance companies are only refunding 50% of the employer aggregate deductible. If you have questions on this, be sure and give us a call. We can help you out. Our number here at the General Agency is 972-466-2915. And be sure to subscribe to our channel for more information on this. Also, what is a runoff period and which one is best for you? Runoff periods, when they talk about level funded and self-funded plans, the contract terms are normally 1218 or 1215 plans, depending on the company. And sometimes these could be negotiated to 1224 contracts and so on. That may sound confusing, but basically what it means is 1218 contract, for example, means that claims are going to be paid for 12 months over specific days. So if your effective date is May 1st of 2020, it'll run through April 30th of 2021. So it'll be, the claims are paid over that time frame. That's what that first number means. The 18 means that the claims are going to be paid for 18 months. So a claim that is incurred may not be paid after 18 months. So in other words, the 18 part of the contract says that the contract written on May 1st of 2020, they're going to start paying claims for the next 18 months, which means the policy will term on 4/30, but they're still going to pay claims 6 months after as a runoff period. So that gives the doctors and hospitals time to submit their claims. Now, all of this may sound confusing, but it's very simple. Remember, if you have any questions, be sure and call us here at the General Agency, and we'll be happy to help you. Our number here again is 972-466-2915, and I have my email up here on the slide as well. So if you have any questions, feel free to give us a call. Have a great day.